Market trends and analysis, unpacking the dynamics of the cryptocurrency market. Welcome to CryptoQuest. Analysts and investors alike are constantly keeping a close eye on the cryptocurrency market, which is notorious throughout the industry for its volatility and rapid expansion. To successfully navigate this uncertain arena, it is essential to have a solid understanding of the trends in price movements, trade volumes, and market sentiment. The cryptocurrency market is continuing to mature, which presents traders and stakeholders with a variety of obstacles as well as opportunities. This is possible because of the expanding institutional engagement and the growing clarity of legal requirements. Important trends in the cryptocurrency market. Price developments. Finding your way through volatility. There is a well-known phenomenon known as the dramatic price volatility of cryptocurrencies, which presents investors with both opportunities and challenges. The following are some of the interrelated factors that have an impact on these extreme movements. Price fluctuations in cryptocurrencies are highly influenced by macroeconomic factors, which refer to the larger economic environment. Inflation and monetary policy. When inflation is on the rise, or when the economy is unstable, Bitcoin is frequently referred to as digital gold, which attracts investors who are looking for a hedge against traditional financial instability. The actions of central banks, notably those in the United States, play a significant effect in the fluctuations of interest rates. Increasing interest rates, for instance, frequently result in decreased liquidity in risk on assets such as cryptocurrencies, whilst decreasing interest rates typically result in an improvement in market mood. Adoption and innovation. The cryptocurrency market thrives on technology developments and adoption in the real world at the same time. Investors are feeling optimistic as a result of Ethereum's upgrade to proof of stake, which was implemented with Ethereum 2.0. This update significantly lowered energy usage and boosted network scalability. Because of the proliferation of decentralized finance DeFi protocols, non-fungible token NFT platforms, and cross-chain technologies, the utility of digital assets has increased, which has led to price increases in tokens linked with those assets. There are various cycles that occur in the cryptocurrency market, which are often characterized by moments of exuberance, also known as bull runs, and corrections, also known as bear markets. This phenomenon, known as Bitcoin halving events, takes place around once every 4 years and reduces the rewards for mining by half. In the past, this supply shock has been known to cause demand surges, which ultimately result in bull runs. It is common for smaller cryptocurrencies, known as altcoins, to see exponential growth in the aftermath of Bitcoin rallies. This is because investors are looking for bigger profits in emerging projects of cryptocurrency. Trading volumes, indicators of activity in the market situation. Trading volumes provide essential insights into the state of the market, the liquidity of the market, and the emotions of investors. The market has been substantially changed ever since the introduction of institutional investors, which has led to an increase in institutional activity. Cryptocurrency products, such as Bitcoin exchange-traded funds (ETFs), have been introduced by companies such as BlackRock and Fidelity, which result in increased credibility and capital inflows. Not only has this institutional involvement helped to stabilize big cryptocurrencies such as Bitcoin and Ethereum, but it has also increased scrutiny, which has pushed for marketplaces that are more transparent and regulated. 24/7 dynamics of the market. Cryptocurrencies, in contrast to typical stock markets, are constantly trading, which results in the formation of distinctive trading patterns. Participation on a global scale. Markets see increased activity during particular time zones, particularly during Asian trading hours, which frequently have an impact on price fluctuations on a global scale. The volatility of the weekend occurs because there is less activity from institutions on the weekends, which means that retail traders tend to dominate, which results in unpredictable price movements. The correlation between major events and trading volumes is that trading volumes frequently increase in response to significant events. Announcements from the regulatory authorities. A favorable regulatory event, like as the licensing of a cryptocurrency exchange-traded fund ETF, can create enormous increases in business activity. Bans or other restrictive policies, on the other hand, can cause products to be sold off. In the case of technological milestones, events such as upgrades to the blockchain, launches of the main net, or big partnerships frequently result in higher trade, which is a reflection of the increased market interest. Global crises or geopolitical tensions can either strengthen cryptocurrencies as a haven or worsen sell-offs as investors flock to traditional assets. Both outcomes are possible depending on the geopolitical factors concerned. The third point is that market sentiment can be used to gauge investor psychology. Market mood is a significant factor in the fluctuations of cryptocurrency prices, and it frequently serves as the impetus for speculative trading. The Fear and Greed Index is as follows. The Fear and Greed Index is one example of an indicator that measures market emotions. These emotions range from extreme fear, also known as bearish sentiment, to excessive greed, also known as bullish sentiment. It is common for this indicator to coincide with large market movements. The influence of social media. Websites such as Twitter, Reddit, and YouTube have a big impact on the sentiment of the market. Price fluctuations might occur unexpectedly as a result of high-profile endorsements or cautions received from powerful persons such as Elon Musk. Metrics available on the chain. The underlying attitude and health of the market can be gleaned from metrics such as active wallet addresses, transaction volumes, and whale activity, which refers to the transactions of significant investors. The cryptocurrency market is experiencing several emerging trends. 1. The influence of institutional adoption on the child's development. The market is undergoing a transformation as a result of the presence of institutional investors. As a result of the availability of products such as Bitcoin exchange, traded funds, ETFs, custodial services, and crypto-backed financial instruments, traditional investors are gaining access to cryptocurrencies. Second, diversification beyond Bitcoin and Ethereum. Altcoins and specialty tokens are gaining traction, supported by unique use cases like as decentralized finance, non-fungible tokens, and Web3 apps. Bitcoin and Ethereum are the dominant cryptocurrencies in the market. 3. Stablecoins and the role they play in the market. Stablecoins are becoming increasingly important for liquidity and stability, particularly in pairs trading and transactions that take place across international borders. Nevertheless, the formation of their development is being influenced by the regulatory scrutiny around their reserves and transparency. The expansion of derivatives markets is the fourth point. Futures and options are two examples of the types of cryptocurrency derivatives that are experiencing significant growth. These derivatives provide traders with the opportunity to hedge risks or speculate on price swings. During the process of market maturation and price discovery, this sector plays a role. 5. The increasing role of artificial intelligence in trading. Tools that use artificial intelligence and machine learning are rapidly being used to evaluate market trends, automate transactions, and predict price fluctuations. This provides knowledgeable investors with an advantage over less experienced investors. Obstacles. Regarding the analysis of the market. The absence of standardized data is the first problem. In contrast to traditional financial markets, the cryptocurrency market does not have any common reporting criteria, which significantly increases the difficulty of conducting extensive analysis. 2. The influence of speculation. The speculative aspect of the market frequently results in prices that diverge from their intrinsic values, which makes fundamental research more difficult. 3. Rapid changes in technological development. Analysts are required to continually learn new things and adapt to changing circumstances because of the frequent technology updates and the launch of new cryptocurrencies. In the analysis of the cryptocurrency market, opportunities are presented. 1. Long-term growth potential. Despite the volatility that the market experiences in the short term, the market's long-term trajectory demonstrates robust growth, which is driven by rising implementation and innovation. 2. Diversified strategies. Investors are able to construct varied strategies to capitalize on market possibilities if they have a solid awareness of trends and make use of tools such as on-chain analytics and technical indicators. Enjoyed the content? Don't forget to like, subscribe, and leave a comment below to share your thoughts. Your support keeps us going.